Hello and welcome to the CNBC TV 18 Earnings Corner. We're here to put the spotlight on Reliance Industries as it reports its numbers. So Sonia, straight away, tell us, what is the street expecting in terms of a consolidated performance?
Well, at the onset, let me start by saying it's been a really good year for Reliance Industries, for the stock that is. The stock is up 35% in 2020. It hit a lifetime high of 2369 in September and hit an all-time high market cap of 16 lakh crores. Of course, it's come off since then, but the reason for this big up move in the stock is because sequentially the numbers are expected to be quite good. Almost all segments will improve except the refining segment, which has been a tad bit under pressure. So here are what the numbers could look like. A 20% revenue up move is what we're looking at quarter on quarter at 1.06 lakh crores. The EBITDA will go up by almost 7.5% at about 18,150 crores, and the margins will be around 17%. Now, the important thing is that across all segments there has been a recovery. So, we're expecting an improvement except in the refining business. Every other segment will do well. So let's look at Petchem, right? Goldman Sachs expects the Petchem business to meaningfully recover from the Q1 trough. They expect the Petchem EBITDA to rise 28% on a quarter-on-quarter basis. Now, the gross refining margins will be largely flat at around $6.4 a barrel. Sonal will talk about that in greater detail. But the big revival will be in the consumer businesses on a sequential basis. So, Reliance Retail is expected to come back because of the relaxation in lockdowns and the improvement in consumer sentiment. Nomura is expecting a 29% quarter-on-quarter growth in Reliance Retail revenues and a 55% growth in EBITDA. So that's the kind of strength you may see. Lower cost assets and an omni-channel strategy has driven market share wins for Reliance Industries as well. Of course, Rima will talk about Jio in a bit, but the key numbers are looking good. Subscriber addition of 3% quarter-on-quarter at 10 million and a 2% uptick in the average revenue per user. The tariff hikes have taken place and that will drive the higher average revenue per user. The larger picture is positive for Reliance Industries. So just to put Goldman Sachs' view on board, they expect Reliance's EBITDA to double by FY25. It's the consumer businesses, both telecom and retail, that are at the cusp of a very strong growth period. So without wasting any time, let me toss it across to Rima to find out how Reliance Jio could look this quarter. Rima.
Well, it's expected to be a good quarter. Bharti Airtel positively surprised in its September quarter numbers. Can Jio do the same? So we're working with about a 5% revenue growth. It will be driven by a combination of subscriber growth as well as a pricing improvement. So price improvement for Reliance Jio is seen up close to 2% on a quarter-on-quarter basis. So the ARPU is likely to stand at 143. Margins largely stable. Profits will be up anywhere between that 7 to 8% band. As the economy unlocked and restrictions were eased, we expect subscriber addition momentum to have picked up. So in Q1, Jio added about 9.9 million subscribers. This quarter, we're expecting that number to be 12 million subscribers. But I think the focus is going to be on whether they've started seeing traction in the postpaid market. Here is where Jio is lacking. Its postpaid subscribers are less than 1% of their overall subscribers, but they've gotten a bit aggressive there. And secondly, when will they launch that cheap smartphone? That is something I think we all are awaiting. But that's about Jio. Let's turn our attention to retail. Mangala, what's the street expecting?
Well, as far as the retail business for Reliance is concerned, it's been the cynosure of all eyes. In just the last couple of months, it's raised close to around $5 billion, 37,700 crores by, diluting 8.5% stake to 7 investors. More than that, it's valued at 4.29 lakh crore rupees. So we will keep an eye out on what is the expectation. The biggest expectation, of course, is the fact that there would be recovery quarter on quarter, primarily as the nation opens up after the lockdown. And the things which are more, important in daily use, the kinds of groceries, connectivity and petrol retail, they will grow year on year. While discretionary part of their portfolio, consumer electronics, fashion, apparel, all of them will be weaker year on year. These are the businesses that also give them higher margins. So put all these things into numbers. We're expecting the revenue to be flat year on year, about 20% higher quarter on quarter. 40,700 crores is what you're looking at for the retail vertical. The EBITDA actually declines by 28% year on year, but there is a near 50% recovery quarter on quarter. Margins would be around that 4.1% mark. But not just this quarter, there are a whole host of triggers for the retail business in the near future. The biggest one, of course, would be any clarity coming in over the Amazon issue with Future Group, and whether that deal goes through or not will be the big question. The second one, of course, will be further investments. They've raised money from 7 investors. Is more money coming in or not? The third one, an accelerated rollout of JioMart, which is currently still in the beta phase. And finally, consumer sentiment. Has it revived post the lockdown or not is something we will be watching out for the retail business. But enough about the retail business. Let's talk about the cash generator of Reliance, that is the petchem and the other businesses.
Absolutely, Mangnam. Let's talk about the petchem and refining business. This time around, we'll get mixed cues here because petchem business will see a sequential improvement. However, refining business will continue to be under pressure. Also remember that is because there was a maintenance shutdown in the quarter. So let's start with the refining business first. So this time around, we will see increased domestic demand and higher sales in the domestic market. However, we need to look at the cracks as well. So while the gasoline and naphtha cracks are improving quarter on quarter, there is a decline in diesel and LPG cracks, and that is why this time around GRMs on a sequential basis will be very flat to come in at $6.4 per barrel. And Goldman Sachs this time around improves refining margins and volumes to both improve in coming quarters as well. But this time around EBIT is expected to decline on a quarter on quarter basis. Nomura expects EBIT at 2,510 crore rupees, which is a 15% sequential decline. Let's talk about the petchem business because the good news lies there. There is going to be a sequential improvement because of higher domestic sales on a quarter-on-quarter basis. Goldman Sachs also expects sequential improvement in margins, and that is because of the domestic mix is expected to improve. They also expect EBITDA to meaningfully recover from first quarter, expect a 28% sequential improvement out there, and Nomura expects petchem EBIT to increase by 15% on a sequential basis to come in almost at that 3,900 crore mark. So good news for petchem, but refining could still be under a lot of pressure. But overall, the numbers are expected to improve on a sequential basis. So that will be the big cue to watch out for. Stay tuned to CNBC TV 18 for a detailed analysis.